Hi everyone. Today let's talk about the debt ceiling progress. Then we have another company exploding on AI news. Then we'll go over some quick economic factors. Then we'll get into the charts. Then we'll look at my results for the day and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So debt ceiling negotiators think that they're somewhat close to a deal, but still have quote-unquote major issues. They say House Republicans are on track to win some of their top priorities, including rescinding $80 billion allocated for the IRS. And in terms of timing, if they do actually come to a resolution today, the House would vote on it on Tuesday, the Senate on Wednesday, and then it would likely be signed that day or the next. So by Thursday next week, we should have a deal if they come to a resolution today. It's interesting to see the optimism that we're seeing today, considering that they're still saying there are some major issues that have not been bridged. But markets are rocketing higher. The S&Ps are up a little bit. The Nasdaq is up quite a lot. Some of that is AI, but I think a lot of it is actually optimism on the debt ceiling being resolved prior to that deadline. But there is still no deal, which is interesting. They mentioned the IRS being one of the major sticking points and that $80 billion allocated to them. In terms of a win for both sides, they say Republicans could correctly claim that they've managed to cut some spending, but Democrats have preserved the vast amount of the domestic programs that they have already funded. And then they reiterate the fact that basically the entire country is at risk if they do not pass something on or around that 1 June date, where Janet Yellen said the country would be highly likely to default on its debts. Moving over to Marvell, this is a company that's gone up quite a lot, once again on the back of anything resembling AI. They did post good earnings, beating on the top and bottom line, but they said AI a lot. You can see they posted 31 cents compared to 21 cents, beat on revenue by $200 million. But again, they said AI a whole lot, and right now that pretty much props up your stock quite a bit. And the company said they're expecting to reach around $400 million plus in FY22 before doubling in 25 on the back of AI. Moving over to the economic calendar here, core durable goods coming in lower than expectation, minus 0.2%. Core PCE came in higher than expectations by 0.1. Month over month, also higher than expectations, both of those being bad, saying inflation is going higher. Headline durable goods was actually better than expectations by quite a bit at 1.1% versus minus 1% expectations. And then here again on headline PCE, higher than expectations on the year-over-year numbers. So inflation coming back, not what you want to see, and core durable goods being negative, also not good. Looking over at consumer sentiment, these were both better than expectations, so the American consumer is still somewhat decent. Moving over to Fed futures here, you can see we're at 66% now for another hike in June. That's pretty likely at this point. We are still more than 2 weeks away, but that's the highest percentage I've seen, and it seems like it continues to go higher every day, especially with those inflation numbers today. Moving down to December, we're now no longer expecting a cut from current prices here. If we get the hike in June, our first cut would be in December based on these numbers. And then now going out to January, that would be the first cut from current levels. So we're actually more in line now with what the Fed has been saying compared to what we've been pricing into the markets. And interestingly, the markets continue to go higher. Moving over to the S&Ps, you can see a big leg higher here today on the hourly chart. We got above my 414.69 level in the pre-market, tapped that level on the first hour of the day, and then rallied through the next level. And now we're looking at 421.85 as the next resistance. Looking at the 12-hour chart, you can see that next trend line up around 423. Looks very bullish, momentum bullish. RSIs are definitely bullish, overbought on the hourly chart, but huge leg higher here on the SPY. Moving over to the Nasdaq, another big leg higher after the NVDA run. Looking at the daily chart, you can see that huge candle after the gap up, so it looks like a gap and go now. This was a big leg at 2.5% higher. We broke above my 347.85 level. We did close above that level by about $1. We're up a little bit after hours. Next level above that is 353.20, so lots of room to the upside here, continuing to bull much, much higher very quickly. Moving over to the Russell and the Dow, you can see the Dow came off that level of support, rallied pretty aggressively back into the middle of this range. Still a downtrend, but short-term rally here looks counter trend. Russell, on the other hand, rallying off of this mid zone, didn't quite end up getting down to my 172.22 level, but we got above 174.38 and that started to look bullish. And then we closed above my 176-ish area here, and then we're rallying a little bit after hours. 177.30 would be my next upper level. Dow looking at resistance at 332.44. Moving over to Apple and Tesla here, you can see Apple ended up breaking through that retest, going much higher, getting very close to retesting these previous highs. 176.15 is the next level here. Above that, I have 178.58. So if we get above this level, then it looks like another $2 or so of upside. Tesla, on the other hand, similarly broke through that resistance, went up very quickly, hit my next upper resistance at 197.75. Now we're back in this range here, and we'll see if we break that level. If we do, we would be looking up to around 206 as my next major resistance. At this point, we might have wicked, come back down, retest 188.50, and then continue higher back in this previous zone. Moving over to Broadcom and NVIDIA here, these were the big players. NVIDIA going up a little bit, 2.5% on the day. But Broadcom, the big player here, gap up yesterday, rally, gap up again, huge move, 11.5%, much higher here on the day, huge volume. These are all-time highs here now, fairly flat base and breakout, so definitely should have been watching this one a little bit closer here, but huge move on Broadcom, and this is really what's carrying the NASDAQ so much higher today. Moving over to staples and discretionary, staples found a little bit of a bounce, hitting VWAP here. Consumer sentiment was okay today, and that pushed up both of these consumer ETFs. Discretionary also moving much higher off of that trend line, retesting these previous highs here. So we're back in this range, 148.89, looking at 153.90 as resistance. And then you have these previous highs, which are currently acting as resistance. So bullish momentum, bullish RSI, but fairly close to these resistance levels. If that breaks, then we're watching for this next trend line up around 156. Moving over to the dollar here just for a moment, you can see we hit that level here today, bounced down off of that level basically throughout the session, but mostly in the afternoon here. Looking at the daily chart, still a bullish day considering that down move yesterday, considering that down move after hours yesterday and then into the morning of today. Big move higher on those economic numbers. And again, this looks like a retest of resistance. We'll probably find a little bit of support in this zone and then we'll push higher again. Overall, dollar structure still intact. If we break this level, 105.50 is my next upper level. Moving over to bond and S&P volatility here. You can see the S&Ps hit that resistance and then sold off here today with the big rally. Bond volatility, however, continues to break out, which is interesting. It's making a little bit nervous considering the rally. We have clear divergence between bond volatility and S&P volatility. VIX rolling over, RSI looking lower. Momentum on the bond volatility continues to build and go higher, so definitely interesting to see that clear divergence. Moving over to my results, you can see I did okay, only down $111 considering that I was slightly bearish going into the day. I flipped early in the session and that worked out for the rest of the day, so not too bad. It looked all right throughout the session. I ended up taking some bullish positions here on the IWM. Then I was bullish on all of these puts here going into the Qs, here on the Qs throughout the day. I have some going out to Monday and a nice put here on Monday for the IWM as well. So everything looks bullish going into Monday. Let me know in the comment section what you think of the debt crisis or the current boom over AI. Definitely like and subscribe if you got any value out of this video, and make sure you check out the Sunday video. I go much deeper into all of the charts in that video, so make sure you hit the bell so you don't miss that. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.